Love him, hate him, or don't really care about him at all like me, Trump did some pretty cool things for business owners while he was in office. And in this Money Secret, I'm going to tell you about a law that he passed that literally nearly no one is talking about. And if you don't know what it is, I'm about to hopefully save you several $1,000s. This rule is called the Qualified Business Income Deduction, the QBI. And the QBI basically means if you're self-employed, that's people who have a doing business as license. You've got a sole proprietor LLC. You're getting distributions out of your multi-member LLC or your S corporation election, or you just got a lemonade stand on the side of the road. The QBI applies to you. And what is it? 20% off all of your income. Let me say that again. 20% off all your income. Now, there's some provisos, as always, because the IRS never gives you a free lunch. It's good up to $220,000 if you're married filing singly or single, and $440,000 if you're married filing jointly. Now, there's some taper off that happens somewhere below that, but generally speaking, if you're in a service business or you're working, kind of doing whatever, this applies to you, and it radically changes the value of an S corporation for anybody who's making $100,000 per year per shareholder in profits. In fact, what we discovered now is that S corporations they're hurting you if you're making less than that, $80,000 to $100,000 per year per shareholder. And it's much better just to stay as either a multi-member or sole proprietorship LLC. And that's incredibly powerful. Now, there are some extended limits for the QBI that go way, way up there, but you've had to hire a lot of employees, deploy property into the business, and things like that. And that doesn't apply to everybody. But otherwise, the Qualified Business Income Deduction is a real thing, and it applies to everyone who's getting self-employment income. Now, what's not considered self-employment income? Well, capital gains is one thing. If you're making money trading stocks, well, that ain't gonna apply to you. If you're getting guaranteed payments from your multi-member LLC, does not apply. And of course, the double taxation nature of getting paid out of a C Corp as dividends, no bueno. And of course, if you're a W-2 employee, whether you're an owner of the business or not, that W-2 income does not qualify as self-employment income, as I'm sure you can figure that out. Before the QBI came in, somewhere around 2017, the S Corp was the only answer for you. But if you made less than $50,000, you were definitely screwed, paying maximum pain, because if you're going to be in an S Corp, you have to take a reasonable wage, and that's W-2, maximum paying tax. And to get a reasonable wage before $50,000, you either have to be living on the street or in the poorest county in Tennessee. But with the QBI, you can get max benefit without the S Corp at all if you're making less than $100,000 a year per shareholder. And if you're building a business, the last thing you want is to get hammered down with taxes while building. And the QBI is the perfect solution for this, rendering the S Corp completely obsolete until you get to about $100,000 profits per shareholder per year. And this is the beginning of your ability to start skyrocketing your desired wealth instead of languishing like right now so many are overpaying on their taxes. Think of the QBI like your business's invisible employee working tirelessly to slash your taxes by up to 20%. And unlike in an S Corp, this helper doesn't clock out at $50,000. Now, this is reasonably new since the Trump era, and a lot of CPAs are not actually having their clients use it, not because they don't qualify, but because they just don't know about it, and I've seen this, and this is really disgusting, they just don't want to fill out the form, which is so dumb. Remember, CPAs are not paid on performance. They're paid on whatever you decide to pay them, whether they do good work or not. If you spend even a little bit of time thinking about how to save money on taxes, and 20% of your income compounded over time really makes your business a lot more profitable, especially if you consider how to reinvest it. So make sure you talk to your CPA about this. Whether you qualify for the QBI, you probably do. 20% off all of your income. Get it into your tax returns for your business this year. Also, if you want to maximize your use of the Qualified Business Income Deduction for your business and set up a structure, and yes, that's possible to have it even better, there's a link to my book on how to do that, Incorporate for Freedom, Corporate Structures of the Elite, here in the description. Go get it, and I'm looking forward to seeing your feedback on it. Until then, be wealthy.